Ladies and gentlemen, Greg Michalowski from ForexLive.com. I'm going to take a technical look at the dollar versus Swiss. There's some interesting technical developments that are showing up in this currency pair that you might want to be interested in. So let's take a look. As traders, we often look for those easy trades, those trades where risk can be defined and limited. And in the dollar versus Swiss franc, looking at the 4-hour chart, there's been some opportunities over the last few weeks that have presented themselves and at least defined a bias and risk defining levels for traders. More specifically, let's talk about in trading, not the last week, but the week before, the price fell below the 100-day moving average. That's this blue line in this chart, this blue overlay line, currently at 0.8892. And in trading, again, not last week, but the week before, the price fell below that moving average line, and we stayed below it. So sellers had the opportunity to sell against that high and that high right here. Low risk type of trade with the hopes that the price continues its move to the downside. And indeed it did, and we saw in last week's trading, fairly narrow trading range ahead here, as you can see. But we continued the movement to the downside. And where do we go? We went and tested the 61.8% retracement. That's of the move up from this July low right here to this high that we saw in the end of September, early October. Don't know which one, but the 61.8% retracement held support here and here and here. These three levels of bottoms have stalled the fall, and the price moves higher. Nevertheless, the sellers remain more in control below the 100-day moving average. But there was a battle going on with the 61.8% retracement. Now, this week, the price in early Asian session yesterday did move back above the 61.8% retracement after dipping below it toward the end of last week. And there was some uncertainty as far as which way the market was going to go. But as we can see, although the ranges, again, are narrow, the high prices since the failed break above that 61.8 have been using that 61.8 as a resistance. That level comes in at 0.88186. So as long as the price can remain below the 61.8% retracement, that's our new risk defining level, or a close risk defining level for traders looking for more downside. So that's an interesting development and an interesting risk defining level for traders going forward. We're currently trading at 0.87991. So not a lot of risk with the move back above the 88.18 level being a close risk level. Now, let's talk about targets. And the next target on the downside, I'm going to earmark as this area right through here, this yellow area where we have a number of different swing lows and swing highs going back in time through here, 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 and finally here before the market moved to the upside. And this area right here, admittedly the price moved above and below it through that level, but there were still a number of different times where the price found support. I just outlined some of them. There's more than that amount. So this area would be our next target on the downside. That level area comes between the 0.8728 and 0.8743. So traders looking for more downside would expect this type of move to be the next target. Following that, we would look toward this swing area down through here between the 0.8689 and 0.86999 level. Let's call it 0.87. That area is defined by, again, swing highs and lows going back in time through here where we had different swing highs. Get it on my arrow here. Swing highs coming through here, forming a little ceiling, traded above and below the levels through here, like we did through here, and then reestablish or establish support here and push the price higher, that have ultimately led to this move to the upside. So this is a target. That's where we're looking at the dollar versus Swiss franc. So once again, 61.8 is close risk. Stable level is more bearish. On the downside, we have this swing area between the 28 and 43 level, and then the 87 to 86, 89 will be the next target on the downside. My name is Greg Michalowski. Hope you found this video interesting and helpful. Good fortune with your trading. Bye-bye now.